what this is all about. And as we dig into today's session, we got a couple of things that we're going to be focusing on. We're going to bump over to Thinkorswim, talk a little bit about that momentarily. What you're going to be looking for. The key thing to start the day is, well, first off, we are under a key moving average. Again, we're under the 50 now, which is important to note. On the S&P 500, watching the NASDAQ bleed off. We're going to talk about Amazon. We're going to talk about AMD. We'll talk about momentum. We do this every morning. Go through the top stories and expectations for today. But again, we hand this off every day, every morning. And if you're not paying attention to this, I can't help you. This is just math. This is just number of stocks breaking out versus breaking down. And some people will say, well, it's all about the dollar amounts. And I get it. I understand it. But this is the signal that has consistently showcased time and time again that something is wrong in the plumbing of the financial system. It is an equation. It is not a very complex one. It is just the number of stocks breaking out versus the number of stocks breaking down with very specific beta readings. And it went negative last Wednesday. And we had what happened with gold and silver happen on Friday, but that was not the bigger story. All the private credit stuff going on, yeah, sure. Okay, we know that. But I do want to point something out, and this is relatively simplistic. The Russell reading, which is just simply a metric of positive and negative, we have to adjust that a little bit. And we focus on the number of stocks that have a very high beta, over 1.5, and market capitalization over $1 billion. And what it showcases is that there are more stocks on the Russell that are up on the week than down, but it's a lot of smaller names where money is rotating into defensives. The stuff that is really getting beaten up, and I mean beaten up badly, it's going to be in the crypto space. It's going to be in the momentum space. It's going to be in the tech and the cyclicals. And everything hit a wall yesterday. So once again, minus 27 is where we sit. All three indices are under negative pressure. The key one I want you to remember, the average S&P 500 stock is swinging roughly 7 times the index right now. But we want to be watching for squeezes. That 7 times the index is the 99th percentile since 2023. So even if the S&P 500 does look calm on the surface, and it has looked calm on the surface, kind of the smoothing that we have seen in the back part, the broader part of the S&P. Let me just go to my full screen because we're just going to have it all open today. Come on. Don't start with me already. Okay. Are we freezing already? Good. All right, good. Let's just move right back to the screen. God. All right. This is my technology. This is my technology bliss. Momentum Bloodbath. So, key thing to keep in mind today, and I want you to keep your focus on it, is the idea that momentum broke down. And what do we mean by momentum broke down? It means that we just had easily one of the worst days that we have witnessed in some time. Yesterday, Goldman Sachs unconstrained momentum basket. This ticker is the GSPRHIMO. It just had its worst day since 2022. 2022. And why does that matter? It matters because that basket fell 7.6%, and the damage is in the AI space. So that very crowded AI space, the stuff where everything has been working for the better part of the last, 18 months, all ran into a wall at the exact same time. What happens as a result of that, you have the AI beneficiaries down 6.5%. You have the AI power numbers down 6.7%. And the crowded trades, the basket trades, all of that stuff gets crushed as well, dropping 1%. And it doesn't look that significant, but as some people will say, there's no smoking gun for this move. That's the beauty of this. The fact that you have people saying, well, there wasn't really a catalyst, right? We heard somebody say that about KKR the other day. KKR fell 10%, and people say, well, there's not really a catalyst. There is a catalyst. It's called mechanical and structural selling in the market. And these are the things that go undetected. And this is why having an equation and having momentum analysis matters. It matters. You have to take the time to assess that it's not just about headlines and it's not just about catalysts. It's about understanding flow. And that's what we saw yesterday. We were warning about this last week over here. We talked a little bit about this, and we noted once again that the structural selling can begin at any moment. And Morgan Stanley estimates roughly $18 billion in equity supply from leveraged ETF rebalancing happened yesterday. What have we been talking about? Morning and afternoon. Leverage in the system, needing to unwind the pressure that we have seen in repo and financial markets and concerns about collateral. All of those things are extraordinarily relevant, but they don't hit the CNBC headlines. They don't get into the national narrative. So you watch this stuff fall and you hear this term, no smoking gun, LLC. This is all about flows, and it's not over because both Goldman and Morgan are saying historically momentum dips like this are good buying opportunities medium term, but they're actually saying, hey, sit this one out right now. And even more confounding, more confusing, more concerning, the speed of this type of momentum move that you are potentially witnessing historically has lasted at least a month. And the median downturn is 22%. Median, not average, median. So let's be cautious in this environment. Let's recognize that we may be witnessing a SWIP. And again, all of those trends, those bigger things that I have talked about in the past, the fact that we are heading into a period where the Treasury General account will start to build, liquidity will tighten in the market. Capital will tighten in the market. All of this is very, very relevant. And it's relevant because, again, seasonality. February is historically an ugly month for markets. So let's just keep in mind where we sit right now, why it's relevant. And once again, if we take a step back and we frame this back and we go back, I don't know, to a one-year chart, and I'm going to pull it up right now, what you're going to see is very simply that this can look a lot calmer than it really is. Under the surface, these swings have been very, very manic, very, very wild. This is standard deviation lines, which we're going to talk a little bit about, because a day like today really does set itself up nicely for volume-weighted average price. We've already seen a bit of a dip this morning in the SPY. Some overreactions. Look, we're already down here toward the third standard deviation line. And I'm not going to be stunned. I'm not going to be shocked in a day like today after a huge negative momentum move like we saw yesterday that you do get a bit of a squeeze, that we do see the shaking out of those weaker hands. On top of this, we will talk about, well, it's back, right? Here is silver, and everything, always, at any time, should be measured on the back of VWAP. But we're going to just cut this out right now and just focus on price itself on silver. This morning, if we look at, back to the charts, back to the flip, get back over there. There we go. All right, we're going to move. I need to move this chat out of here. Once I move the chat out of there, then I can just give you the full screen. And that's what the kids really want. That out of the way. Get that right there. Oh my gosh, we're doing so much better. Silver crashing 10.5% today. Look at what happens in precious metals. We fell as much as 17% last night before bouncing, and it's now down more than 30% from last week's highs. Gold dropping 3.5%. And that, again, is so critical to be paying attention to right now. We'll pull up the full desktop, and then we can flip back over here. Look at us go. Oh, man, it's a brand new day. A lot of quoting of Sting today. 444 on the GLD. We're at around 4,800 per ounce. Copper falling below 13,000 over last night. And here's what's driving this. We have a bit of a feedback loop. A feedback loop. You know what that is? Doesn't matter. It doesn't matter if you do. Thin liquidity in the over-the-counter market is amplifying every move. Banks are struggling to trade. They're holding positions even temporarily. Doing this has become very, very risky for them. So what we have to do in this environment is just be cognizant and aware that in this environment, these leverage positions are still unwinding. There still is a lot of exposure and a lot of concern right now about the state of this market. There's going to be more volatility. There are going to be more headlines built around gold and silver, obviously, because once again, the overall expectation is that we're in the middle of a mercantile war among major countries. We're starting to build stockpiles. Gold and silver went first. And now the question is, what is next? Crowded trades are being punished everywhere. So unwinding everywhere is creating more unwinding everywhere else. Google doubling its AI capex. Yikes. Alphabet, look, these numbers are absolutely stunning. They reported after the close yesterday, they beat on the top and bottom line, and nobody cares, right? They don't care. EPS, 18-cent beat. Revenue, about a $2 billion beat. Here's the bombshell, $180 in the middle, billion in CapEx expected this year. AI, that is double what they spent in 2025, 50% more than what analysts were expecting. Stocks down this morning despite that beat, and the market is saying we're not sure if all this AI spending is going to pay off. And I bring you back once again to that 2022 moment. And the company's name was Meta. And the company got absolutely pulverized. Back here, forgive me, let's go back into a customize my list. Time frame, there we go. We're going to go back 5 years. Right here, there's Meta. That was back when Meta's capex around AI, not AI, around the metaverse was monstrous. They were planning on spending more money in real terms than the Apollo missions. And the market came back, and we got momentum back, and we got liquidity back in the system. But as you can see, and this is very important, these stocks got punished largely because of spending expectations. And as we take a look at this and we assess all of this capex, the market sees that there is refinancing issues in the future. The market sees that there are concerns about repo. The market sees how much money the U.S. government is borrowing and how the government may crowd out private investment. And they're saying, how are you going to pay for all of this? So this is going to remain a major trend as we run toward the runner. I'm going to keep going. The ECB and the Bank of England expected to hold rates today. The Bank of England already did. I have not seen the ECB. I will assume that they are holding. But here's the story. UK gilts, their bonds are underperforming this morning. They're down sharply. Now, this matters because the Prime Minister Starmer is under intense political pressure. And now the odds of Starmer being out by June 30th is at 47% on the binary markets. Here we go again. We did this in 2022. We have other nations right now facing banking pressure. We're seeing it with Japan. All of these crises, all of these things that have manifested since COVID are all happening at once. We are in an unprecedented period because all of the same things keep happening over and over again, and people keep acting like, well, wait a minute. How could anybody have seen any of this coming? And the reality is, this is all about the plumbing of the financial system. I don't, as much as I care about trading and about technicals and everything else, at the end of the day, liquidity is all the way upstream. And all of this is coming home to roost all at the same time. And when people say, I don't understand why the markets, just think back. Go all the way back to the origin story. And the origin story is the debt and the deficits and the plumbing of the financial system. ECB's under pressure. Bank of England's under pressure. Bank of Japan's under pressure. U.S. is under pressure. Meanwhile, China and all these other Eastern nations are buying up metals, setting up anything that they can do to get around the dollar. You are living in an unprecedented time. And it's going to feel difficult, but the point is you've got to pay attention to the technicals. You've got to pay attention to the liquidity. You've got to pay attention to the volatility. It is screaming at us right now. It's telling us that this is not normal, and we will see if there is a policy response. But at the end of the day, it is going to be a very interesting second half in 2026. I said things will get weird before they get bad. Well, we're in the middle of the weird part right now. Speaking of weird, Bitcoin falling to 70,000. First time since the 2024 election. And Mr. Bessent came out and said there will not be a bailout for this. Once again, I argue. I want you to remember this. I argue, and I will simply state, Bitcoin is a liquidity pressure valve. So excess liquidity in the system finds its way into Bitcoin and not on the margins of food and housing and other types of real assets. It basically has become its own little market for excess capital to flow into. It's not really a commodity. It really is a pressure valve for the global financial system itself. Well, we need somewhere to go. Well, let's move into something that has no friction, pure momentum, and trades around technicals. Great. Because everything else has fundamentals and everybody else has people and systems that they have to worry about. Crypto doesn't have to deal with this. So when this pulls back, it's telling you a couple of things. Excess liquidity is tightening. And in addition to this, a lot of the leverage positions in this are being unwound potentially to pay margin elsewhere. But it's very critical just to keep this stuff in mind. This is not, this is a pure reflection of liquidity in the financial system. And I've said time and time again, we hit the top of our liquidity cycle. We did that back in MSTR. We did this back in October, right? And we've been selling, let's go back to a 1 year, please. There we go. Here's your high in July for MSTR. Liquidity cycle tops out around here. That is late third quarter. And since then, technology stocks have been bleeding off. And since then, we have seen a significant amount of rotation in the last 3 months into the things that this area of the liquidity cycle should showcase, which is lots of focus on energy, lots of focus on materials, and a lot of focus on consumer defensives. And consumer defensives continuing to perform well. As of right now, as we look at the current state of affairs in the groups area, well, consumer defensives are up 12% in the last month and 15% in the last 3 months since about that peak. Very critical. So recognize we're heading into that crypto winter. And where could this bottom out? I don't know. I will say probably in the 35 to 40,000 range. Couple other quick things before we call it into our good old friend, the runner. Iran and the U.S. are going to talk this week. We're going to do this dance again. Crude is selling off as a result, and crude is really being heavily driven by the ongoing flows linked to this story. But I will note, I've said it a couple of times, you got to pay attention to the OILU. And the OILU, and we don't have this up, but we'll pull it up right now. Let me add right here the relative strength index. And we're also going to add the money flow index. Right? You can see right here the OILU, which is the leveraged ETF that is, or in ETN that is linked to the selective ETF, the selective energy, top 10 energy names in the United States. We are at levels on the RSI, the price momentum indicator, we have not seen since all the way back before this event in April, you may recall it, but we're overbought right now. So what I'm arguing at this moment, particularly with a lot of concerns about oversupply in the global markets, if there is a positive resolution, the upside right now is to the downside.
Not showing your chart, G.
What's up? Oh, I'm sorry.
Chart. Yep.
Thank you. I appreciate it. Still getting used to going back and forth. There we go. Sorry about that, everybody. RSI, MFI, overbought. And as you can see, the RSI down here, MFI down here. When we get stretched like this, historically, the upside will be, quote unquote, to the downside. And what I mean by that is there is a good reason to take a nice shot on on some of these momentum stocks that have been on the move. Devon has moved very quickly in the last couple of days, DVN. That is going to be merging with Katera. But it's the other names in that space. Look at names like Apache. Look at names like Permian Resources. Big runs that have happened in recent days. Everybody's overbought. So just the slightest positive headline heading into next week. If you're going to take a shot to the downside on some of these names, because, again, we are stretched, and we tend to not stay here very long. Look historically on the daily RSIs of a lot of these upstream EMP names. All right. I promised you that we would get to this one day, and today is the day. We did it, everybody. All right. We start with FITB. Oh boy, here we go. We're going. We're going in right off the bat with the regional banks. Fifth Third Bank is a good bank, but very overbought bank. Very strong bank. FITB has been in focus in recent days. The regional banks are under, obviously, some pressure, but certain banks are doing better than others because of their improving overall focus on reserves. The strength remains here. Stock is currently overbought on its daily RSI, 70 on that, MFI 79. So I would be looking for a little bit of a pullback into that 52 to 54 range. Hold on 1 second. Let me get a couple of indicators up here real quick. I want to put up volume weighted average price anyway. And we're going to do this in a second, but here's today's range. Let's go back 5 days. 5 days on the 15-minute. So stronger momentum, higher highs, higher lows, but overall the financial sector itself has been negative. So a name like FITB, if you're going to try to trade it, it would make sense to potentially do a pair trade where you go long a short a name like this and long a name like Truist. I like Fifth Third. I'm not wild about the banking system at the moment, particularly heading into earnings season, but we do know that there has been some strength at that mid-tier level, and there is the expectation of more M&A in the year ahead. AEP pops up. It's a name that we have not seen in a while, American Electric and Power. It is moving above its 8-day, 20-day, 100-day, 50-day EMAs. And why does that matter? It matters because just a continuation of strength. AEP is a name that I would prefer to sell put spreads on down here, somewhere around going out into that February period. Look at somewhere down around that 110 to the 105 level, 115. The 115 is currently under the 100-day moving average. This has tested its 100-day moving average consistently throughout the year. We've seen periods where it will pull back and effectively trade along that 100-day EMA. So that's kind of where we look for selling spreads down here in the 110 to 105 level. And if you're not a person who wants to take possession of the stock, well, once again, you can just look for an opportunity to sell puts or sell put spreads around these names. If you do have to take possession of it, you turn right back around and you sell calls. But the broader point here is that there's always an opportunity to trade these names. It's just about having a very specific strategy. And with the utilities and the way that this trend continues, I remain positive on a lot of these names. PPTA and TKO are in focus as well. Okay, PPTA, Perpetua. Not a name that I see that often, I will tell you that. But same thing here. I'm going to get out of VWAP. And I'm going to add some exponential moving averages. So EMA, or exponential moving average. I'm going to add 3 of them. Settings-wise, just so everybody is aware of what we're trying to accomplish here. This is automatically going to be setting up on the 9. I'm going to the 8. Then I'm going to the 20. And then I'm going to add the 50. And then pull back on our daily charts. All right, we're behind. I got to change the colors. I'm aware. That does not work for anybody, anytime, anywhere. It's going to be a chaotic show, everybody. We're changing our tech around. Ooh, that's a nice color. Nice soft pink. Start your day. Orange. Apply. Done. All right, let's pull back. All right. That's the trend that we're constantly looking for, right? We're looking for that blue line, that 8-day to cross back over. Well, PPTA has just been a little bit of a sad disappointment. But we are heavily focusing on some of these material names. This was a stock that saw some insider buying a long time ago and a big momentum move to the upside. And in the world of that trading of these materials and the headlines that are associated with it, PPTA had a huge move to start the year up from about 24 up to 36. What we're looking for is a reload here. And it's going to be around that 50-day moving average that's going to be so critical. 50 days at should be down on the daily is 23. Nope. 28.29. 28.29. So we're being skewed a little bit by the pre-market. And then finally, TKO. Hey, who wants to talk about what happened at the Royal Rumble? If anybody knows what happened at the Royal Rumble, you can go. I have no idea. TKO, big insider buys last year, 206, momentum waking back up. We're going to get some numbers, obviously, out of the WWE, and I know it's kind of a crazy stock to be trading, but if you see that 8-day, that green line coming back above that pink line, that's the 20-day moving average. Looking for a continuation of strength. So that's where you're buying in the money, somewhere around 200, selling maybe at 210, maybe selling at 215. But keeping a structured trade in place so that just in case it does pull back, you're managing any potential risk. All right, on the downside, and this is kind of where our focus has to be for the next 24 hours. It is really not a great time for Las Vegas Sands and for the rest of those stocks that are in the consumer cyclical space that are tied to broader momentum. Interestingly enough, this stock came out of oversold in recent days. You can see it right here. And it's had a nice pop. But now the question is, if it can't get above its 20-day, which is the 58.83 level, and it starts to creep back lower and roll back over, well, then it becomes a trade where you're buying something like the 57.50 if it's available for February 20th, and buying the 50 or selling the $55 put. So 57.50, 55 spread, relatively clean trade if you can pull it, and just looking for this to roll back over after a little bit of a short-term squeeze. On top of that, you have some other names that do need your attention, and that's SOC. Oof, what a dog this has been. Stable offshore. Same type of story, right? We just had a little bit of optimism in this market. We had a nice little pop. This thing went up to about $13, and now it's rolling back over. You know what to do. Crossover negative on the 8 and 20-day EMA. Weakness, selling spreads, or forgive me, buying a put spread, staying at an elevated level. Stay in the money. Go to 10. Buy the 10, sell the 5. Buy the 10, sell the 750. Just try to take gains and look for a continuation of lower highs and lower lows. And finally, on UBS, well, this is, again, all tied to private credit. This is tied to ongoing concerns in the broader market. This company announced $3 billion in new buybacks, affirmed all of its targets, talked about its ambitions, talked about managing wealthy outflows and warning of headwinds. U.S. American wealth outflows, yikes. Net profits, okay. Hiked its dividend by 22%, still down. So continuation of trend, continuation of movement, and once again, a lot of these companies, particularly private wealth, under a lot of pressure, particularly private credit, and there is exposure here. Same thing. Put spreads, buying in the money, selling out of the money. Finally, I would be remiss if I don't bring up the good old SQQQ and the FNGD. The SQQQ is not something that wakes up very often, but when it does, oh boy. This is the continuation of trend. The last time that we were above the 100-day moving average on the SQQQ was very briefly in April 21st, but the last time that it really cracked was March 27th of 2025. Why does that matter? Because this is telling you right now leverage positions are unwinding. The FNGD has been doing that for us for a week or so. And now, as we continue to move, the SQQQ becomes a proxy to watch. Now, I think it's going to be very important today that you bring up volume-weighted average price. Because once again, when it comes to VWAP, and if you haven't set up volume-weighted average price before, the way to do this, and I'm going to share my screen real quick so you can see the whole thing. The way to do this is you go into your Studies tab, you add VWAP, and you do it 3 times. You are going to edit each one of these. One is going to be -3. The other will be 3 here. Okay. You leave your second one, and you click on your third one, and all of these are -1 and 1. Why does this matter? Because as you're going to see, every one of them's pink, isn't it? You stink. Sorry, 1 second. Yellow. All right. Apply. Done. Let's go to our daily. All right. The FNGD is elevated. Let me just look real quick at the SPY. The SPY is down here. This is your volume-weighted average price sitting here in the middle. Everything's yellow today. We're going to figure all this out. Volume-weighted average price, that middle line. This is the 66% of expected price, 97%, 99.7%, okay? Why does that matter? If you come into this market and you're down here, if we open at 9:30 and you try to start shorting at that exact point, you better be prepared to cover your butt. We want to be looking today for this market very early on to do what it does. Suck everybody in to try to continuation. They saw that big negative momentum bet that started off the day. What can happen really quickly? People get sucked in. They try to short real quick, and then all of a sudden, we're back at 683, 684, 688 by the end of the day. And then once everybody's pulled, then it rolls back over. As I said, $10 billion more potentially to be sold in the coming week or so, according to Morgan Stanley. That's the leverage system. And what does that mean? It means that there's going to be some hijinks along the way. There always is. It doesn't change. Things don't change. The purpose of the market is to sell, and they're not going to sell at the worst price possible. They're going to look for opportunities as they emerge where people could step in and bid. All right, so people come in and they bid and they sell it, and then they let it all go. Continuation of trend looking negative. We'll get back here at 3 o'clock to talk more about momentum. do some things today with Thinkorswim, setting up different types of charts, talking about the different technicals that are very, very critical to us, and we will go from there. It is 9:21. I hope everybody has a great trading day. If you have questions, I got to figure out all this stuff on my screen. I need to get another 4 or 5 of these things. We'll go from there. TheoTrade, support at TheoTrade.com. Put Garrett in the subject line. I hope you have a great trading day, and I will catch up with you on the other side. Take care.